Ladies and gentlemen, good day and welcome to the Q3 FY24 post-result earning call of Railtel Corporation of India conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from IDBI Capital. Thank you and over to you, Mr. Periwal.
Thanks, Tushar. Good afternoon, everyone. Just to clarify, welcome all to the Railtel Corporation of India Limited earnings call. I'd like to thank the management for giving us this opportunity to host their call. From the management side, we have with us Sanjay Kumar ji, Chairman and Managing Director, V. Rama Manohar Rao ji, Director of Finance, Manoj Tandon ji, Director Projects Operation and Maintenance, Yashpal Singh Tomar ji, Director Network Planning and Marketing. So as usual, we'll have an opening remarks from the management and then we'll have lines open for Q&A. Sanjay sir, over to you.
Very good afternoon and very happy new year to all investors. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q3 Limited Review financial results of the company for financial year 2023-24, which were declared yesterday by the company. The company achieved total revenue of 675 crores for Q3 as against rupees 613 crores in Q2 of FY24 and rupees 462 crores in Q3 of FY23, registering a sequential growth of 10% quarter-on-quarter and 46% on year-on-year YOY. The operating revenue of the company for Q3 is rupees 668 crores as against 599 crores in Q2 of FY24 and rupees 454 crores in Q3 of FY23, registering a growth of 12% quarter-on-quarter and 47% year-on-year. The telecom segment contributed rupees 329 crores and project segment contributed rupees 339 crores in company's operating turnover. The profit before tax in Q3 of FY24 is rupees 84 crores against rupees 43 crores in Q3 of FY23, registering the growth of 95% year-on-year. The company posted profit after tax of rupees 62 crores in Q3 of FY24 as against rupees 32 crores in Q3 of FY23, registering the growth of 94% year-on-year. EBITDA for the Q3 of FY24 is rupees 125 crores and the EBITDA margin is 18.49% against Q3 of FY23 of rupees 80 crores and 17.33% respectively, thus registering a growth of 7% year-on-year in the EBITDA margin on percentage basis. For the 9 months ended on 31/12/2023, the company achieved a total income of 1,770 crores and a total PAT of rupees 169 crores, registering a 38% and 50% year-on-year growth respectively for turnover and profit. Company's margins in project segment has improved from 5% during the last year's 9-month period to 7% during current year, resulting in improvement in EBIT margin to 13% during current year 9-month period as compared to 12% during last year. With the robust order book of around 4,800 plus crores, bolstered by new orders worth rupees 2,000 plus crores during the current year itself, we are poised for continuous growth in future. At the end, it gives me immense pride in sharing with you that recently Honorable Vice President of India, Shri Jagdeep Dhankar, presented the Scope Eminence Award to Railtel. We won the award in Institutional Excellence category of Mini Ratna 1 and 2 for overall outstanding performance during the year 19 and 20. I on behalf of Railtel, wholeheartedly thank all our investors for their faith in us, which inspires us to extend our limits and propel Railtel to greater heights. We deeply value the trust of our investors and stakeholders and shall remain thankful for their continued support. Jai Hind.
Should I open for the questions?
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avinash Khara. He is an investor.
Hello. Hi, am I audible? Hi, good morning. Thank you for taking my question. First of all, I think there's been a mistake. I'm Avinash Khara from Investec. The first question I have is, can you provide me the breakup of your NLD, ISP and IP revenues for the quarter?
Yeah, so this is rupees 145 crore from NLD, 113 crore from ISP, and rupees 68 crore from IP1 category.
Right. And my second question is on your other expenses. If I look at them as a percentage of your revenues for not just this quarter but last quarter as well, on a YOY basis, they've come down significantly. So is there any ECL provision reversal, or is this what we can build in for the foreseeable future?
No, there is no reversal as far as ECL is concerned.
Okay, got it. And then can you maybe throw some color on what has led to this sudden fall in your other expenses?
So last quarter there might be some provisions. Other expenses increase. So let me just give me 10 seconds. So there's no, I don't think there's any significant, maybe some provisions for some PRC.
Right. Okay. And what about your overall guidance for projects and telecoms? Are you sticking to that, or is there going to be any change?
No, we are going to have continue with the same guidance which we had last quarter also.
Right. And maybe I can just slip one last question in. I just wanted to understand, the margins that you all are winning on the new projects, given they are no longer won on nomination by Railway. How should we think about the project revenues and margins going forward?
So margins, if we talk of project revenue, we will remain in the same bracket, 5 to 7% kind of overall, because there might be projects where, as I've been telling earlier also, that this depends, the margin depends upon the competition, the area, the sector, geographical area. Many factors are there, and we don't want to lose any opportunity where we have potential to work. So that is why the overall margin of project, I can say that will remain in same 5 to 7%.
Got it. Thank you so much for taking
other expenses. I would like to again say that we haven't seen any significant change in other expenses.
Got it. Okay. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question.
Good afternoon.
Good afternoon, sir. I got few questions. First, what is the order book as on December 31st?
On 31st, we were around 4,600.
Okay.
And now, today, we stand at around 4,800.
Okay. So it has increased by 200 crores.
Yeah.
Just want to understand a little bit more on the railway rollout on 700 megahertz spectrum. Is there any development? Are they deploying 4G? Are they deploying 5G? Where are they in the process, and how are we involved in that?
So it is basically railway is going ahead with LTE only.
Okay. 4G.
And the POCs are underway, and we are one of the POC conducting agency. I believe this would answer your question.
When we say we are POC conducting agency, what it really expand our scopes to?
They have identified few companies, few system integrators, you can say.
Okay.
And they have shortlisted one of them. We are.
Oh,
and
so we are among one of the shortlisted.
Conducted, in South Central Railway.
Okay.
Yeah.
And what will be our scope of work in this? It is installing the radios, towers, and fiberizing the towers. All this will be the scope of the work?
Yeah, almost. Actually, basically, the purpose would be the conducting POC with core, and of course, a RAN element would be there.
Okay.
Because otherwise, LTE has to come. LTE will come into picture only when the RAN comes. Radios.
Correct. Radios come.
Yeah.
And what about the towers, sir? We were also anticipating 7,000 to 8,000 towers, which would be a potential opportunity or a complete addressable market for this. Are we also there in the tower?
We are erecting few towers. We have got an order also from railways in South Central Railway for erecting these towers for LTE purpose only. Recently only, that was posted on SEBI portal also. So
Correct.
There we are, and we would certainly try to get advantage of this potential which is there for us.
So the capex will be done by railway, or capex will be done by Railtel for this particular purpose?
This is a project. This is not IP1 business.
Okay.
So
it's a project, so it will be done by railway.
Yes.
So how will we benefit? So this will not be available for sharing with us, right?
See, we will have to work out on these modalities maybe with Ministry of Railways for these new towers, but
Okay.
yet now nothing.
Nothing, right? Got it. My second question is in coverage. We earlier said that the technology was in a development process and we were watching that very keenly. Where is that right now? I think there are certain orders which have been already rolled out, and I think one of the orders we are there right now, right?
I think from the last quarter, we haven't seen any activity as far as railways is concerned. So the previous orders are still under implementation by the agencies who were awarded these work. And this POC, which we are part of it, will also contribute to the maturization of Kavach products, of course, because it's part of the overall signaling system, that anti-train collision system. So this is also this LTE POC which I talked about is part of the
Yes.
same exercise.
Okay, it's part of the same exercise. So when realistically we can expect actually the rollout of Kavach in India? Will it take another 12 months? Do you think so?
Means, as you have already said that there's one part of the Kavach which is already under rollout, but that is
Correct.
on the VHF radios, not on LTE. So yes, you can optimistically we can anticipate that it should happen in next 12 months, maybe at least starting. But I would not be the right person to comment upon this
No, fair, sir. I'm just trying to pick up your thought there. Sir, my last question again pertains to the tendering of edge data center, which we have been talking now for last few quarters. Where are we in that process of tendering the edge data center?
It is already in final stages. So bids have been received, they are under evaluation, and shortly we should be finalizing.
And it will be 120 edge data center, if I remember it right.
No, the 100 locations we have identified, and we will certainly begin with few important major locations, and then we'll proliferate it further to. So our target is 100, but we'll start with few. Maybe in this quarter we might start the journey.
Got it. One last bookkeeping question on the other income. Other income has dropped from 13 crores to 6.5 crores in this quarter. Any reason for the decline in the other income?
Other income. See, interest income is the major component in other income generally.
Correct.
So,
Correct.
Generally in Q2 we have to pay dividends and all those things. So our reserves also reduce, and accordingly the interest income. It has been a trend previous years also that Q3 other income.
Q3 has the lowest other income. Yes. That's the only reason, right? We utilize the cash, so interest income declined for that quarter.
Nothing exceptional. Yes.
Nothing exceptional. Fair enough, sir. That's it from my side. Thanks for answering all the questions, and best of luck for the coming quarter.
Thank you, Sandesh.
Thank you, sir.
Before we take the next question, I'd like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Good afternoon, sir, and congratulations on outstanding numbers. My question.
Congratulations to you as well.
Yes, sir. My question is, sir, can you give me some sense on the trajectory going forward? Like in terms of sales growth and net margins, like broadly we are clocking at what you told last time, some 20% sales growth and 12% net margins. Is trajectory would be the same? And what could be the levers for the growth going ahead, sir?
See, optimistically, conservatively, I would say we are continuing with the same guidance, and we will certainly continue to strive to do better than ever. So that will be the effort by our team. But certainly 25%, I can say maybe 20 to 25%. Last quarter I may be saving 20%, so now I can say 25% conservatively. We should continue to do in future quarters, and maybe we will be doing better also.
So 25% top line growth, and the margins would be same at 10-12%? 12% net margin?
Margins, yes. Margins will also be in the same range.
And 25% conservatively will grow, so there's a higher chance of growing more than 25%. That's what you're indicating, sir, right?
Just can you repeat your question, please? Because I think there was some noise coming.
You said 25% will grow conservatively. It means that there is a very good chance of growing more than 25%. Is that right, sir?
Yeah, we hope so. We will try to do that.
And what could be the triggers, sir, for the growth in the years ahead? Next year?
Mostly it will be project income, because project income is going to give us the maximum growth numbers. And we are actually coming into new areas also, like signaling. We have already started working and getting orders also through open tenders. Railway work through open tenders. We have started. We are continuously getting new orders. You must have seen on orders shared with the portal. So that is one. And we are expecting in value-added services like Aadhaar authentication services also. We are doing good job, and we see these are small streams, but many smaller streams we are working upon, and those are certainly adding to our top line. And project, of course, IT/ICT projects, of course, continue to be there, the major driving force.
And Kavach should be additional to this. Next year, Kavach comes in.
Kavach in near, I don't see next 1 or 2 quarters, but yes, later on Kavach will also add on to.
Okay. That's it from my side. All the best and Jai Hind.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Thank you for the opportunity. So my first question on the margin for the in this quarter against the revenue growth of 11.6% for the on Q&Q basis, margin has slightly lower pace. So is there any mix which impacted the margin for the at EBITDA level?
There is nothing specific. See, actually, if you see in quarters, so it is possible in the basket of basket of projects being executed during that quarter may have a mix where number of projects with lesser margin, maybe 5%, slightly more or something like that. So we don't see any specific trend. We are continuously working in the same range, and if you will see on the maybe on 9 months period, if you see, you will find that there is a consistency. So quarterly results, if we watch as these smaller numbers, you may see such trend, but there is no specific reason behind it.
Understood, sir. And secondly, in terms of currently we have order book of 4,800 crores. So what is the time frame to execute this order book, sir?
This is spread over taking from 1 year to up to 10 years, because there are some projects which are spreading over 10 years also.
So how as an investor, how should look at in terms of revenue visibility from the order book from a 2-year perspective from the order book?
Yeah, so if I see out of this order book, next year we might be converting into revenue around 1,300 to 1,400 crores. Okay. Just an idea I can share with you.
Okay. And the last one small data point on YTD basis, what is the order inflow growth vis-a-vis last year 9-month period?
That data maybe we may have to find out. I'll share this number.
Maybe on the call you can share. It will be great, sir.
Yeah. Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sri Harsha, an individual investor. Please go ahead.
Hello.
Hello. Yes.
Am I audible?
Good afternoon.
Good afternoon, sir. And congratulations on a good set of numbers for FY24.
To you too.
I have a couple of questions. Can you throw some light on the opportunities available in the train avoidance collision system and your expected JVs or collaborations for the train avoidance collaboration with the foreign manufacturer or the local manufacturers?
Yeah. So I'll maintain the same numbers which I have been telling earlier also. Out of this Kavach opportunity, we are expecting 4,000 to 5,000 crores of opportunity, which is spread over next 5 to 6 years. And if you talk of tie-up with the OEM, so the approval by railways are still undergoing, and they haven't added any new OEM, and we are continuously in touch with the newer ones. And the opportunity, I would say that there is still, we are waiting for new tenders to come. POCs, as I shared with in the earlier answer, that we are part of one of the POC related to Kavach only, So we are also expecting tenders from railways, and then we'll certainly participate in that.
Thank you, sir. Another question is with regard to the order inflow. Can you throw some light on the order inflow expectation for financial year 25 and 26?
So order inflow, like this year, we are expecting we may be touching somewhere around 2,500 crore of order this year. So next year, we will be certainly targeting to get at least 4,000 to 5,000 crores of new orders, or adding to our order book.
Okay, thank you.
The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. So can you give some clarity on the Railwire, where the subscribers are and how is the addition in this quarter?
So yeah, the Railwire, our subscriber numbers are roughly close to 5.67 lakhs right now, and we are facing very cutthroat competition in urban areas, and we are continuously trying to reach the rural areas also, and additions from rural areas are in good numbers. But still, we are finding innovative ways to continuously innovating the tariff models, the bouquet mix, and all those things. We are continuously in touch with our partners. There are 9,000 plus partners on date with us, and they have trust in us. And so we are continuously working on this and then going at. We want to achieve a number beyond which maybe our journey will be smooth. So maybe 10 lakhs number or 8 lakhs of total subscriber mass may give us that threshold.
Right, sir. And then any internal targets that you have, sir, when we plan to, in which year we are having that target of 8 to 10 lakhs?
We will try to do this by next year.
Okay, sir. Okay. And then this 5.67, what could be the breakup in that urban and rural percentage-wise? Any broad number if you can share? How the split is?
Roughly around 60-65% is from rural. I think 60% is from rural and 40% is from urban.
Okay. And then what could be the ARPU in this quarter for the 5.67?
525, 530.
529.
Exactly. Yeah. So 529 is the exact number for this quarter.
Okay. And then this ARPU, sir, how this will differ in urban and rural, this number?
Actually, when we are talking of ARPU, this is more or less the same, but we have some SME customers in rural areas, tier 3, tier 4 towns, who are big pay masters because they are taking for their even business, small and medium enterprises are also taking. So rural areas, we can say we are getting more revenue from rural areas. Maybe that's why the rural area ARPU would be more.
Okay. Got it. And maybe one last, and then I'll come back in the queue. Sir, I think we have broadly mentioned that our growth rate will be 20 to 25 odd percent. But sir, I think in this year, if you look at, we have done a pretty strong set of revenue growth in 9 months, 3 quarters which have gone. So because if we just do that working, then probably it looks like quarter 4 could be a flattish sort of number. So anything that we should read more on it?
No. I would say it is ruled out. It will not be flattish. We will continue with the same momentum. And the 25% I told, that is a conservative number. But that is for sure. We are certainly there for doing much, much better. we are continuously working towards improving our performance and satisfying our investors.
Okay. That's very heartening to see. I think till this year, I mean, we have done pretty well, and market is also has been quite supportive. I'll come back in the queue for more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Hello, can you hear me?
Yeah.
Good afternoon. Congratulations on the good set of numbers, sir.
Thank you.
Your remarks earlier, participant, that you expect the order inflow to be in the range of 4,000 to 5,000 crores next year, sir, right?
Yes.
So that means, sir, the run rate for the order inflow will be much intense compared to from this year, right, sir? Because this year, in the opening remarks, you mentioned 2,000 crores of orders you have got, if I'm not mistaken, sir.
Yes.
So what makes you confident about this order inflow, sir?
See, when we see some cricket match, when a batsman is playing, when he's making runs, so he aspires to then do fours and sixes. So our confidence and our team is working very hard to make it better and better every day. That is the confidence I have, and the trust of our investors, of course, is there.
Okay.
So that is driving us, and that is all I want to say.
Yes. Thanks, sir. And all the best, sir. Thanks for a wonderful number.
Thank you.
Thank you. Reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity again. So can you give some color on a couple of initiatives that we were taking in, say, RDN side, content of demand, COD, which was there, anything that is happening or attraction that we are seeing?
Vishalji, I think I have been telling in earlier calls also, we have moved much ahead of the RDN. So if railway gives that opportunity to us, we are there to do it. Otherwise, we have a lot of other opportunities, and we are not now very keen. We are there. We have solutions. Given the opportunity, we will be doing that.
Right. And in project side, sir, is it like railway or non-railway that we are seeing attraction in terms of opportunity for us?
So, yeah, railway, non-railway has always been the major share in project business. We will continue to have around 15% of the business from railways overall, including services.
Okay. And for this quarter, sir, will we have this revenue breakup between railway and others for project work services?
This quarter, railway and non-railway, just a minute, I'll share this number with you. There's 9 months. So 9 months is there. No. Let me get this number and then share with you.
Sure, sir. Yeah, I think that's all from my side, sir. Thank you very much.
Thank you.
Railway 161, 167.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question.
9 months. So in 9 months, Mr. Vishal, if he is listening to me, railway, the 9 months performance, 167 goes to railway and 640 goes to non-railway. This is 9 months. Yeah, next question.
Participants, this is the final reminder that you may press star and 1 to ask a question. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, thank you for the opportunity again, sir. So my question is regarding the last participant. You said a top line of 5,000 crores order book. Like, do we consider of small orders, or are you counting in the Kavach order inside this order book?
See, this certainly will have. This is basically a projection, and will certainly have all kind of orders, including Kavach and other railway projects.
Okay. So Kavach could also be a part of this when you said we have 5,000 crores order book, right?
No, 4 to 5,000 will be over spread. Basically, revenue booking will be spread over next 5 to 6 years, because the execution of these projects will take time.
Okay. But the 5,000 order book will touch next year or when? Because right now at 2,000 crores order book, if my understanding is correct.
5,000 we are targeting. 4 to 5,000, not 5,000. This is a number which I can show kind of opportunities available in the market, the competition, and of course all these things will. We are targeting around 4 to 5,000 new orders next year.
Okay. So you're counting Kavach also in that order book, right? You are projecting Kavach.
Kavach can also be part of it.
Okay, sir. Okay. Yeah. Thank you, sir. Thank you so much, and all the best, sir. All the best.
Thank you.
Thank you. The next question is from the line of Bala Subramanian from Arihant Capital Markets Limited. Please go ahead, sir.
Sir, thank you so much for the opportunities. Sir, on the broadband connection side, we have around 5.67 lakhs, and rural and urban mix 60-40. I just want to understand which are the areas we are specifically focused on, like skirts or west. And I just want to understand, still the rural market is underpenetrated. What are the growth strategies we have on that increasing the connection side? And I just want to understand the realization side also, like whether how much the realization side is in this quarter.
I think so. Can you just repeat your question, because I think your voice was somewhere.
Hello. Yes, sir. Sir, on the broadband connection side, we have around 5.67 lakh, and rural and urban mix 60-40. I just want to under the growth strategies we have to expand further, and I just want to understand the realization side also.
Realization, if you talk of rail wire, there is no issue of any realization. Most of these are prepaid, right? So there is no issue of any realization. If we talk of strategies, so I can just give you indicators, but really cannot share these strategies because these are trade secrets. But yes, we are encouraging our partners and they are basically boosting their morale. So they are the ultimate connect with the customers, and we are holding meetings with them even at the senior management level also. And of course, innovating, bringing new innovative product and product mix and tariff strategies also being worked out.
Okay, sir. So in this urban-rural mix, like what kind of mix we can expect in next 2 to 3 years?
See, our focus continues to be in rural. Because I think you said in your the thing that rural area is under-penetrated. There is a lot of scope.
Got it, sir. Got it. Also on the CapEx side, like how much we have incurred in this quarter, and what kind of numbers we can expect in next 2 to 3 years on the CapEx side?
So this year we have done around 180 CR of CapEx, and we will remain in the same range. Though we have not worked out capital expenditure for the next year, we'll be doing an exercise within Q4 of this year, financial year only. But certainly will be around the 200 plus. That is minimum as we see now, but it will be certainly more.
Okay, sir. Sir, on the data center side, what kind of opportunities we have? I think we are planning for Noida data center projects also. And like what kind of opportunities and what kind of growth we have in next 2 to 3 years?
The data center market in India is already very hot, and we are doing every bit to basically harness this potential. And as far as Noida data center, we have already come out with an RFP, and that is under basically now bidders must be going through a pre-bid held, and then so we are hopeful. Cannot comment right now on the numbers, but we are very much serious about this. That much I can share with you.
Got it, sir. Got it. Thank you so much, sir, for the great answer. All the best.
Thank you.
Thank you. As there are no further questions, with this, we will conclude the call. On behalf of IDBI Capital, thank you for joining us, and you may now disconnect your lines.
Thank you.